I'm diving into the world of investments to see if I can outsmart inflation and keep my money growing. Let's find out what really works. Inflation, in simple terms, is the rate at which prices for goods and services are rising. It may seem like a minor concern, but trust me, it has a significant impact on your investments. As an investor, you need to understand how inflation works and how it affects your hard-earned money. So let's dive in and explore why you should care about inflation when it comes to your investments. One of the biggest challenges investors face due to inflation is decreased purchasing power. As prices rise, the value of your money falls. Imagine you had $1,000 last year, which could buy you 10 units of a product. With inflation, the price of that product increases, and now your $1,000 can only buy you 8 units. That's a significant reduction in purchasing power. Another challenge is the erosion of investment returns. Inflation can eat away at the returns on your investments, making them less valuable over time. If you're earning a 5% return on your investment, but inflation is at 2%, your real return is only 3%. That's a significant difference, and it's essential to consider inflation when making investment decisions. Inflation can also lead to uncertainty and volatility in the market. As prices rise, investors may become wary, leading to market fluctuations. This can result in losses if you're not prepared or don't have a solid investment strategy in place. Furthermore, inflation can affect different asset classes in different ways. For example, fixed income investments like bonds may struggle with inflation as the interest payments are fixed and don't keep pace with rising prices. Stocks, on the other hand, can be a good hedge against inflation, as companies with pricing power can pass on increased costs to consumers. However, not all stocks are created equal, and some may struggle with inflation. Real estate is another popular investment option that can be affected by inflation. As prices rise, property values may increase, making real estate a potentially attractive option. However, rents and property values can be affected by inflation, and it's essential to consider these factors when investing in real estate. In terms of bonds, inflation-indexed bonds can provide a hedge against inflation, as the interest payments are tied to inflation. This can help protect the purchasing power of your investment returns. When it comes to protecting your investments against inflation, diversification is key. Spreading your investments across different asset classes can help you navigate the challenges posed by inflation. Another strategy is to focus on investments that historically perform well during periods of inflation, such as precious metals or commodities. These assets often increase in value during inflationary periods, making them a popular choice for investors. It's also essential to have a long-term perspective and not to make emotional decisions based on short-term market fluctuations. Inflation is a natural part of the economic cycle, and investors who can ride out the ups and downs tend to do better in the long run. To summarize, inflation has a significant impact on investments, and it's essential to understand how it affects different asset classes. By employing strategies like diversification and focusing on inflation-resistant investments, you can protect your wealth and achieve your long-term financial goals. Thanks for watching, and I'd love to hear your thoughts on how you're navigating the challenges of inflation in the comments below. If you're interested in learning more about investment strategies, be sure to check out our video on diversification.